Hey everyone, welcome to Market Outlook, Trends, Risk Events and Trade Setups, brought to you by Vantage Markets. This is a weekly webinar where we focus on what's been happening in markets and what is about to happen in the week ahead. Whilst I'll just let you have a quick look at the disclaimer, I'll just run through what we hope to get through in the next 30 minutes or so. Normal format for most of you guys who do follow us. So we'll just check out how markets are trading currently. We'll look at the biggest theme at the moment, which is Greenland and Trump and tariffs, I guess. So we'll just briefly give you some thoughts on what we're thinking there. We'll then get into the Q4 earnings season. So we have Netflix obviously reporting this week, as well as Johnson & Johnson and Intel, probably the biggest ones. So we'll just get into a little bit of that and review as well what we saw from the banks last week and also TSMC actually as well. And we'll look at some of the charts around that. We'll then check out last week's main data points, so the US inflation data, which is important for markets a little bit, although slightly muted reaction, really. We'll look at UK GDP and sterling, which leads us into a lot of UK data this week as well. It's middle of the month, and generally we get a sort of big data dump out of the UK, could potentially impact sterling. So we'll look at some inflation data, preview, and earnings as well. That being jobs data out of the UK. And then we also have a couple of big Japanese yen events going on. We have the Bank of Japan meeting, of course, but also then the announcement of this snap election as well. So we'll give you a few thoughts on that. And then if we have time, we do have other data points like the PMIs. We'll look at euro dollar, we'll look at dollar yen, as I said, cable, so sterling against the dollar. And also, hopefully, we have time. We'll look at the Aussie jobs data and the Aussie dollar as well. So lots to get through, of course, always is generally at the moment. So much going on with geopolitics for sure. And then obviously central banks kind of less important at the moment, potentially this year, just because they've really done their policy easing in a way, and potentially they're on hold for quite some time. The major central banks, apart from some like the Antipodeans, possibly, or the RBA, who may be hiking sort of middle of the year, but otherwise could be quiet on the central bank front going forward, as I say. But it's more a lot of other events which are impacting markets, and of course, one is geopolitics, and one is has been driven by the White House and President Trump. So obviously, just getting into that really. Markets off at the moment, stocks sold off. It is a US holiday, don't forget. So the Martin Luther King Jr. Day. So that is US holiday. Stocks are closed, but futures are open. But there will be thinner liquidity. Just remember that. So the dollar's slightly off. Stocks down, as I say, and then precious metals, safe havens doing well. So gold, silver hit record highs, but they're just off those highs now. We've seen the yen and Swiss franc, mainly the Swiss franc, really find a bid on, as I say, haven flows. So the weekend really that saw Washington really up the ante in its pursuit of Greenland. Basically, the threat of 10% rising to potentially 25% tariffs on 8 European nations. Kind of looks part of the sort of theme we've seen before, this sort of maximum pressure playbook to basically secure a deal around Greenland. Many, well, political commentators are writing that this will prompt potentially the end of the EU's appeasement policy towards the US. It's interesting how we had a very strong reaction over the weekend from EU leaders, but now they're sort of tempering that slightly. That said, France do seem to be at the forefront of recommending basically the strongest possible measure, which is it has been called the EU trade bazooka, actually. So it's the anti-coercion instrument, the ACI, which is a trade tool, basically targeting taxes, tariffs, and investment limits on countries trying to coerce the EU. As I say, the big trade bazooka. They reined in, or they pulled back from using it before when we had issues, or when we had obviously Trump's tariffs last May. So they pulled that back because they wanted to Not go tit for tat, if you like, and they agreed to the deal, which really didn't wasn't that favourable to them with the US, but they thought that was the better policy. Now, of course, potentially, as I say, many political commentators saying that sort of appeasement policy is now redundant. We shall see. I mean, the topic and the threat of a NATO split that looks set to dominate the policy agenda this week, then, which is otherwise would have been heavily focused on Ukraine, of course. President Trump, he's due in Davos at the World Economic Forum. And due to speak on Wednesday, I believe he's there Wednesday and Thursday, where EU leaders are set to meet on the Thursday. Question, of course, will be whether those European leaders follow really China's playbook from last year, and they do then ramp it up and match US tariffs one for one. Um, we've seen that play out. China, as I say, did that, and that ultimately prompted a Washington climb down. So whether we see that going forward will be interesting. I think market reaction, as I've talked about, with gold going higher, silver going higher, DAX, the German DAX lower by down 1.3% or so, dollar slightly weaker. So it's sort of telling you it's a US story rather than just a Europe only story, really. Um, but yeah, pay attention to futures really because US markets are closed, as I say. Bottom line, really, yeah, just wary of chasing these geopolitical themes. Often we saw it with Venezuela, for example, initial reactions and then things calm down. And typically it's sort of noisy rhetoric, which we get before then diplomacy plays out, I guess. Um, if we look at a couple of the stock markets, then just bear with me one second. Should say, always say this, but as well, if you do have any questions, please do ask them along the way, and we'd be more than happy to help. Any questions you have, of course, whatever we're looking at or whatever you're looking at as well, please do ask any questions. Just bear with me one second. Just pull up a couple of charts then. Um, First up, I've got the DAX chart actually. So the German index, the main German index, which has been outperforming. Let's not forget. US markets really. Also, the UK FTSE's been outperforming US markets at the moment, though the DAX is down 1.4% or so. You can just see that high made on Friday at 25,507. I've got the previous high in there at 24,771, and we're just above that now. So interesting whether we can hold that level or not. In the German DAX, you can see the 50-day moving average. Let me just get rid of the Keltner channels. Is the blue line. Sorry, bear with me. Blue line is the 50-day, which did sort of has worked as decent support. Actually, you can see pretty much, yeah, acted as decent support even during Liberation Day last year, where we obviously plunged. This is the weekly chart, just for your guide as well. Decent support there, and that's now at the 50-week moving average, then at 23,594, just for your guide. If I go to the daily, then you can just see this rounded sort of top, maybe not really. Just looked like bullish consolidation really before a move higher, but that move, sorry, the high from last week was not Friday, actually was Tuesday, just for your guide, 25,507, and that previous high from October at 24,771. Those levels in the DAX. FTSE off as well from those record highs. Just pull that back. You can see really nice ascending channel, really higher highs, higher lows. We're just tapping the bottom of that channel. Interesting whether we go and break down through it. But levels are quite some way away from that previous high, just below 10,000. 10,000, the round number, I guess, will be a level if we do break down some more. So stocks, yes, having or struggling at the moment, but whether this is just a pause before then possibly, as I say, diplomacy plays out, or actually Taco. I've been talking to various people about Taco. Trump always chickens out and Yes, it's whether what tactic Europe uses really, which will be really interesting, and whether they um yeah, pause on in their appeasement and go harder or not. And we shall see going forward. But generally could play out fairly quickly, we're thinking, even though obviously we've got this initial sell-off in stocks, especially. Just moving away then from that sort of geopolitical story to Q4 earnings season then. As I said, we've got Netflix, we've got Intel and Johnson and Johnson this week, probably the biggest and most well-known names. I'm just pulling up the Netflix chart here. Yeah, those high profile names reporting, and we're just sort of heating up really now after the banks last week. Of course, Netflix reports results in the middle of its really quite high stakes battle with Paramount Skydance for Warner Brothers Discovery. That has hit the Netflix stock that you can see here. Um, and really, that deal is set to shake up the media landscape. Interesting, I think options have a forecast for plus or minus 7% move on Netflix after their earnings. Their earnings being on Tuesday evening after the US close. So Tuesday evening, that's UK time, of course, but after the US close on Tuesday. So just watch out for that for Wednesday potentially being interesting with that plus or minus 7% move priced by options. Um, Probably have to look at the weekly chart here and just look at some support previously from April of last year, and then also January around 81, sort of 75. We're falling quite quickly here after this high stakes battle, as I say. So probably support around the, yeah, as I say, 81.75 level. The blue line's the 50-day, that's at 109.94, well above, and the black line's a 200-day moving average at 62.49. So kind of, yeah, initial support there around the 81 level, 82, but otherwise not much support really. But we are getting into sort of oversold territory with the RSA. You can just see at around 30. That's Netflix. Just for your guide on the other stocks I mentioned, Intel potentially options pricing, well, a plus or minus 7.4% move. And they report on Thursday after the US close. Johnson, that options expect a 2.8% move plus or minus after their results. Just on banks, then I said I touch on those mixed results really. After last week's big banks reported, JP Morgan, they warned Trump's proposed 10% cap on credit card interest rates that would hurt consumers. While Morgan Stanley and Goldman Sachs, they both reported bumper earnings, which really capped Wall Street's best year for big banks in 4 years, actually. So four of the five big US houses reported an increase in quarterly fees from advisory work. And really, then with Trump's deregulation agenda, we talked about that last week. That really is expected to deliver another boom, actually, for the big bank industry. Interesting that because JP Morgan's weren't markets focused on a couple of their issues, whereas, as I said, Goldman Sachs, Morgan Stanley, they hit record highs, and the banking index generally has done very well this year, going into those results being at a record high. In fact, if I just show you that, you can just see this is the banking index of the S&P 500, the big banks, and you can just see, as I say, that record high previously last week. That's the weekly chart. And then we just sort of rolled over and then sort of come back on that. You can't really trade that, but it's just sort of a guide for how well financials have been doing. I also mentioned TSMC. That's obviously the world's biggest chip maker. They jumped after posting really blowout earnings last week and guided this was key for billions more investment, really, which essentially helped a load of other semiconductor names like Applied Materials and CoreWeave. They were up nearly 6% both on Thursday after TSM's results. So yeah, interesting sort of point of four. Yeah, another AI driver, even though yeah, at the moment, especially the Mag 7 stocks are lagging. And in fact, yeah, I've been talking to various people that's talking about them not being the Mag 7, but the lag 7. Not my phrase, but yeah, just to sort of point out there how they are underperforming foreign stocks, really, other stock markets, and have been, and we've highlighted that previously over the last few weeks and last year as well. Um, okay, let's move away from stocks. Let's just actually just go to the indices now. So you can just see us hovering around the all-time highs. I've got a previous all-time high there actually, which I need to just lift this to 69.85 in the S&P, so just short of 7,000 there. Not much to talk about. 50 days just below. Nasdaq, you can see is not and has not created recent record highs, so that's why a lot of the Mag 7 are lagging. As I say, 50-day moving average, the blue line, that's at 25,321, and then that recent well, not recent now, but October from last year, that record high is at 26,182. The Dow, otherwise, has made record highs. That made record highs last week and then came off there at 49,633. And we're just below there now at 49,359. Previous record high, I've still got in there at 48,886. And then the 50-day below 48,000. Okay, let's move on from stocks then to small typo here. Actually, a review of US data really from last week. First up, yeah, inflation data. Interesting. Provided another soft inflation print, really. Headline prices rising 0.3% month on month as the consensus forecast, but core inflation that rose only 0.2% versus the 0.3% prediction. Yeah, a very small miss, but just a touch softer than really. And interesting because there was a chance. I know some economists were thinking that we would actually get a higher print of 0.4%. Excuse me, in large part due to timing issues related to the government's shutdown that really heightened the influence of price discounting later in November 2025 relative to the sort of normal 2024 November timing. But that didn't happen. The key takeaway probably is that goods prices were very benign, and that really underscores the point that tariffs have had a far more muted impact on inflation than feared, really. Goods that are often imported and therefore subject to tariffs. And this is interesting. It suggests US retailers are squeezing their profit margins. So just something to watch out for in the detail there. In terms of sectors actually that continue to run hotter, the key primary rent and owners equivalent rent that increased 0.3%. Transport services that increased 0.5%, largely down to a big jump in airline fares. Bottom line, really, it was interesting, as I mentioned at the top of the webinar. Markets really saw a lot of statistical noise, really, potentially in this data from the government shutdown. Certainly, it is a good outcome, obviously, softer prices. And I've always said this core inflation month on month, we need to get, economists reckon, a reading of just below 0.2% actually over a number of months to get back to 2%. And we haven't had that at all recently. So possibly a good outcome overall, this report, but obviously clouded really by statistical noise, as I said. Fed Chair Powell, he has suggested that the tariff impact hasn't got much further to run actually and could peak in this current quarter. So that kind of indicates that policymakers possibly on course to cut rates further if we do see this easing and the tariff sort of question also easing back as well. Um, Otherwise, many economists are looking at sort of falling gasoline prices, slowing housing rents, which are a big part of the CPI basket, remember, and then weakening wage growth, or at least easing wage growth, potentially contributing to CPI continuing to trend lower this year. That's therefore going forward the picture potentially, and then we could get, of course, closer to the 2% Fed target towards the end of the year. That's CPI then. We also had US retail sales. They exceeded expectations, actually rising 0.6%, indicating consumer spending remains strong heading into year end. We also had PPI inflation data, just for your guide as well. For November, that increased by 0.2% month on month, bringing the annual rate to 3%, and that's up actually from 2.8%. So a slightly different picture in that sort of downstream prices gauge, the PPI gauge there, just for your guide. That was the US data from last week. We also had, as I said, UK GDP data, surprised actually better than expected, rising 0.3% after a narrow contraction through October. Um, the month was basically, and we gave the preview last week, we thought it would be dominated by the uncertainty over the November autumn budget. That really impacted on sentiment, on business decisions, really, and people not investing while waiting for that event. These numbers kind of disprove that, really. But they do bounce around month on month. GDP figures are always volatile. And also, it's interesting that seasonality issue that we thought could be happening with the sort of first half of the year stronger than the second half, going back to 2022. So interesting, really, going forward. I know many people have been negative really on the UK and possibly do we get a surprise going forward in 2026 um, with certainly possibly more rate cuts than expected, closer EU ties as well. A number of factors which possibly could surprise, but of course we'll wait and see what happens in the first quarter of this year going forward. Um, does lead me in then to the other UK data that we get this week. So data dump, as I say, unemployment probably first up. Um, that's on Tuesday actually, but sorry, just checking Wednesday's CPI. Let's get to that first. So both headline and core prices in December expected to increase to 3.3% from 3.2% previously. Um, Again, upside probably driven by measures in the autumn budget. But for your reference, the Bank of England's forecast is actually for 3.5% for this period. That's from the November monetary policy report, the MPR. December services inflation, that's predicted to rise 0.2 to 4.6%. Though there are problems with the data potentially, higher airfares, and also when the data is collected could impact on these figures. Just for your guide, PMIs they showed a strengthening in inflationary pressures as 2025 closed out, with input prices lifting by the most in 7 months and output charges rebounding. Overall, the skew to the series is probably a hotter one, really, particularly given the Bank of England's forecast. For the bank, the assessment that inflation will get to target mid 2026 probably should remain intact, even if there is a hotter one off print in this data. As such, though, the narrative of continued easing, but at a potentially slower than quarterly pace, will probably remain. But it will be interesting if we do get this sort of spike higher in this one off print on Wednesday. Bank of England rate cuts really not one priced in until June, just over 25 basis points, I think, priced in by June. Though by April, it's interesting. Some economists think that inflation will be much closer to 2% by then. So we'll see, because yeah, we're still elevated at the moment, although, as I say, peak inflation could be coming soon. Let's pull up the cable chart. which is here. Bear with me 1 second. Yeah, it was interesting last week. We sort of looked as though we were rolling over. You can just see it here. We moved down but below the black line, the 200-day moving average. That's now at one. Let me get rid of that. 134.00 actually. So we moved down below there, but yeah, again, today we dipped down close to the blue line, the 50-day moving average of 133.24, but we're back above now, actually, the 200-day, interestingly, and above 134 now. You can see it's got some short-term fib levels in here, and we're sort of at the halfway point, just above the halfway point of that high from July last year down to the low in November of last year. That's at 133.97, and we're just hanging around there. Top side 134.88 to 61.8. And then you've got that high from, well, the January high actually 135.67. Got a question in here actually, so bear with me 1 second. Is higher inflation better, or if UK close into 2%? Kind of answered that, I think. And I think if I understand you, so at the moment, inflation is elevated, and that's the issue for the Bank of England. Of course, they're battling slightly stagflation, so high inflation really and stagnant growth. But potentially, as I mentioned in the GDP, if those numbers pick up, then that might surprise to the upside. But then obviously, then inflation could stay elevated for longer. As I said, I think many economists, and we're probably similar to that feeling that we should go back closer to 2% through this year, really. Um, and then that means potentially we do actually see rate cuts. And I know, as I said, the first one's not priced until June, but potentially we could see that earlier if after this spike that we potentially get on Wednesday, then we should see prices rolling over after that in CPI. So softer prices and closer to 2% going forward. Hopefully that's answered your question, but please do tell me if it hasn't otherwise. Sterling, though, if the UK certainly does surprise, and it has surprised many already, I would say, speaking to quite a lot of people who were quite pessimistic on the UK over the last few months, and especially with the November budget. Well, sterling's held up okay so far, and potentially, yeah, could surprise some people. We shall see, of course. But yeah, hopefully that's answered your question on CPI. But appreciate your question, and yeah, any others, please do ask away. I wanted to also just show you a couple of other sterling charts. So quite interesting. We follow and trade these. So euro sterling, really interesting sort of consolidation here, which means to us that we're going to get a big move at some point. Consolidation is price contraction, really. And when you get narrow prices, at some point you will get a breakout. So breakdown, or obviously an upside break. Interesting. In this instance, we got the 200-day moving average below as support at 86.41, but there is this trend going down. So interesting whether we bounce off this and get a decent strong move higher or not. But the more prices track sideways, the bigger the breakout will be. The other sterling chart is sterling against the yen. I mentioned this in our week ahead actually. And if I go to the monthly, you can just see where we touched this major level from back in 2008. You can see there that dotted line at 21179. Sorry, that's where we're currently trading. But if I go back to here, so we tapped it. You can see there a couple of times 214, 214.28, and where were we? 214.11. So major resistance there, long-term resistance from 2008, and we've just yeah, it did its job really, and we've rolled over really. So we're back to this sort of these levels here around 211, 210, 210.50 or so, where we're tracking sideways. And I say more time we track sideways, then the bigger sort of breakout we will get, and that's what we got. But then straight into that resistance and back down. So interesting whether we can hold this, or even then we get back to well that previous high from July 2024, actually, very big cycle high there. That's at 208, 208.12, sorry, which tallies then with the 50-day moving average, which is at 208.15. So just a couple of other sterling crosses for you, really, that we're keeping our eye on as well. Okay, moving on from that to which ties in actually with sterling yen, with looking at dollar yen as well, then with these events in Japan. First up, of course, Japanese Prime Minister Takeichi. Sorry, let me just show you that chart. Hopefully, I was showing you the other charts. Hopefully, I was, but bear with me one second. Yeah, sorry, bear with me one second. Yeah, so let's move on to dollar yen events basically. So yeah, we've had Japanese Prime Minister Takaichi obviously pretty much betting her sort of personal popularity really with the voting public, and hoping that will translate into a stronger mandate with her decision to call this snap election on February 8th. Little bit of a gamble, really. Cabinet rating is above, or her cabinet rating is above even that of her mentor, Shinzo Abe, while her party, though, that's the issue, the scandal tainted LDP essentially, that continues to sag near historic lows. So interesting call by Takaichi. For now, probably investors do seem to believe her coalition can at least expand their very, very small lower house majority, and then potentially that gives her more scope for big fiscal stimulus. That has seen the Nikkei 225 roar to record highs, while the yen and basically long dated government bonds, they have sunk quite sharply. I think the yen here is down 5% since Takeichi's ascent, essentially. Um, and long dated government yields have been soaring as prices have been falling, essentially. Dissolution of the Parliament next Friday, that paves the way for polls, which then possibly overshadows the other big event, of course, of the week, which is the Bank of Japan policy decision. But just for you, Guy, just before we get on to that, then Takaichi, of course, is a dove, a fiscal and monetary dove, and that's why we've seen obviously this. If she gives out a big fiscal stimulus, then obviously stocks do well, domestic stocks do well, and as I say, we've seen the Nikkei and the topics do very well in over the last week or so. The yen not so, as I say, in here you can see dollar yen tapping that previous high from January last year at 158.87. We've just rolled down, rolled over really, and back below that level now. For the Bank of Japan, um, everybody really expecting them to stand steady, really keep rates unchanged at 0.75%. That's after they raised rates only last month, of course. Most economists, I think, see July as the timing for a follow-up hike. But really, on this meeting, we'll be listening to Governor Ueda's assessment of how recent weakness in the yen might affect inflation, of course. Interesting, based on the tone of his rhetoric in his speech from last week, it looks probably very likely that the press conference will confirm more of the same this year, basically. So the bank remains cautious over the pace of rate hikes ahead. And he really gave no impression that the depreciation of the yen was in any way altering the Bank of Japan reaction function. He basically repeated actually the common guidance of there being a need for further rate hikes if the economy unfolded as expected. We do get as well, just for your guide, the latest quarterly outlook report from the bank. So GDP forecasts for this year and next, they are expected to rise due to fiscal stimulus. And then regarding the inflation outlook, government subsidies could ease some pressure temporarily. But then we do get higher wages combined with that weaker yen are likely to keep core inflation elevated. Bottom line, really, the bank will remain open to further rate hikes, but it really won't rush its next move if inflation certainly moderates, at least by the first half of next year. So it could be a quiet-ish meeting, although obviously his latest comments on the yen and its impact on inflation will be key. As I said, 158.87 key resistance. You've got the 50-day moving average, the blue line at 156.21 there. Okay, otherwise, let's just quickly get to the Aussie data, which is here. Um, Sorry, we do get as well the Fed's preferred measure of consumer inflation, just for your guide. Sorry, switching around here. That's the core PCE number out on Thursday. Expected to print at 0.2% month on month, 2.8 year on year. November figures will be influenced probably by missing data sources, actually. So the markets could look through this. But certainly a print near 3%, of course, reinforces really that Fed stance of waiting and seeing. So wait and see stance certainly going to happen next week now, actually, with the Fed meeting next Wednesday. And we are in the blackout period as well now for Fed officials. So we won't be really hearing from them until next Wednesday. Sorry, just before Aussie jobs, one other important announcements we could get. We've been talking about this year, but we haven't had it yet, which is of course the next Fed chair. So the Fed chair nominee by President Trump. The dollar rallied interestingly on Friday when it emerged. Trump wanted Kevin Hassett to stay in his post, actually, which meant betting markets really went on Kevin Walsh being as now the front runner for the Fed chair. That was mildly dollar positive, actually, as it certainly, and if it's confirmed, it could be. And we saw Treasury yields, a 10-year Treasury, move sharply higher on that news, really, because he's seen as much less dovish than Hassett. But obviously, let's not forget President Trump wants rates cut. So will be an interesting appointment potentially. Okay, finally, Aussie jobs. Here's the Aussie dollar. Um, yeah, consensus expects actually a turnaround from last month, 25,000 jobs to be added. That's after the negative downside surprise last time. Unemployment rate, that's seen ticking up 1/10 to 4.4%, with the participation rate modestly recovering. As I said before, there is a high chance of a rate hike by June, actually, around 20 basis points priced in. So, like an 80% chance of a rate hike by June. That supported the Aussie, you can see here, and we're just now, um, yeah, just below, hovering below this sort of minor fib level of this move from last year, the high at 69.42 and that low from Liberation Day. That 78.6 retrace levels at 67.21, which does look as though it's capped the upside previously. Otherwise, that spike high from earlier on in January is at 67.66. So interesting, really. It just looks like bullish consolidation before a move higher. As I say again, more we track sideways, the bigger that break will be. Otherwise, if we do break down, then you've got the 50-day moving average at 66.11. Okay, I am going to wrap it up there. Yeah, we've covered everything. I'm just checking what we've covered. Yeah, hopefully that's been of use to you guys. Please do follow us on social media as always. And I do say, as always, we do put out a daily commentary after the US close as well. That goes on the website. Really do appreciate you being on the call. Never taken for granted, and appreciate all the questions or any questions as well. And we will speak to you same time next week.